Have you ever found a hidden treasure in the attic? You know, a beautiful antique or maybe a collection of old gold coins? Well, that exciting discovery could come with a little surprise from the tax man. It's something many of us overlook, but selling valuable items has real tax implications here in the UK. It's a question that more and more people are asking. I mean, when does a passion project or a family heirloom turn into a taxable event? The good news is you don't have to figure this out on your own. We've actually teamed up with the experts at My Tax Accountant to walk you through everything. So, in this guide, we're going to slice through all the confusing jargon. We'll break down exactly what you need to know for the 2025/26 tax year, giving you some really clear, practical info on how to handle the tax on your gold and collectibles the right way. Okay, so here's our game plan for today. First, we'll look at what the taxman even considers a treasure. Then we'll navigate the different taxes involved, cover the absolute golden rules of record keeping, and, this is a good one, reveal a key tax-free exception. We'll wrap it all up with some real-world examples. Let's get into it. Right, first up, what are we actually talking about here? It's not just about gold bars or priceless paintings. HMRC has a pretty broad definition, and you might be surprised what counts as a personal item that, if you sell it for enough money, could land you with a tax bill. So the official term the tax office uses is chattels, or just personal possessions. And this covers a whole range of things: jewelry, paintings, antiques, you name it. It even includes sets of things, so say a collection of matching vases or a full antique chess set that you sell all together. Now, if you're going to remember one number from this first part, make it this one: £6,000. Generally speaking, you only need to start thinking about tax if you sell a single item or a single set for £6,000 or more. If it's below that, any profit you make is usually exempt. That's your first key threshold. But that's not all, and here's where a lot of people can get tripped up. It's not just one single tax you need to have on your radar. Depending on your situation, there are actually a few different taxes that could pop up. You've basically got four main players on the field. For most of us who are just selling a personal item, the big one is capital gains tax, which you can see makes up the lion's share here. But things like that, inheritance tax, and even income tax can apply in certain situations, especially if you start buying and selling regularly. So, what on earth is capital gains tax? Well, putting it simply, it's just a tax on the profit you make when you sell something that's gone up in value. It's the difference between what you originally paid for it and what you sold it for. You can think of it like the tax you might pay if you made a profit selling shares or a second home. Okay, we've come to what is, without a doubt, the most crucial part of this whole discussion. Seriously, if you take only one thing away today, let it be this: keeping meticulous records is your single most powerful weapon for staying on the right side of HMRC and, importantly, not paying a penny more in tax than you absolutely have to. And hey, don't just take my word for it. The experts at My Tax Accountant are crystal clear on this. Getting your records wrong can be a really expensive mistake. We're talking potential fines and, you guessed it, paying way too much tax. Good records are literally the foundation of good tax planning. So how long do you need to hang on to all this paperwork? Well, the advice from both HMRC and the pros is to keep all your documentation for at least 6 years after the tax year it relates to has ended. That way, you're covered if HMRC ever decides to ask questions about your tax return down the line. So what does a good, clean paper trail actually look like? Well, think of this checklist as your essential toolkit. For every valuable item, you need to know the dates you bought and sold it, the prices, have proof of it all, and a good description. And oh, don't forget those associated costs, like auction fees or valuations. Those can actually reduce your taxable profit. Now, stay with me, because this next point might genuinely surprise you. When it comes to tax, not all gold is treated the same. In fact, there's a very specific type of gold that gets incredibly special treatment from the taxman. Now, this is where it gets really interesting. While pretty much all investment-grade gold is VA exempt when you buy it, just look at that massive difference when it comes to capital gains tax. Gold bars, foreign coins like Krugerrands, they're all subject to it. But UK legal tender coins, we're talking about things like the Britannia and the Sovereign, are completely exempt from CGT for UK individuals. That is an absolute game changer for investors. And that leads us to our pro tip for today. This unique combo, VAT-free when you buy and CGT-free when you sell, makes these Royal Mint coins an incredibly tax-efficient way to hold gold if you're a UK investor. It's one of those details that can literally save you thousands of pounds in tax. All right, so that's the theory, but how does all this actually work in the real world? Let's walk through a couple of common scenarios for the 2025/26 tax year to see how these rules apply to real people. First up, let's meet Alex. Alex is a freelancer living in London, bought a gold bar a few years back as an investment, and has now decided to sell it to help fund a new business project. Now, Alex kept great records. The bar sold for £15,000 and it was bought for £10,000. Alex also paid £500 in dealer fees. So the total gain is the sale price minus the purchase price and those fees, which comes to £4,500. For the 2025/26 tax year, the annual CGT allowance is £6,000. Since Alex's gain is below that, the taxable gain is zero. No tax to pay. But, and this is key, Alex still needed those records to prove it. Okay, now let's switch gears and look at Sarah. Her situation is completely different. She isn't just a casual investor. She actively runs a small online business, buying and selling antique silver. Right, because Sarah is trading, the rulebook changes entirely. Her profits aren't seen as capital gains. They're treated as trading income, which means they're subject to income tax at whatever her rate is. She has to keep formal business accounts, and if her sales go over the VAT threshold, she'll need to register for and charge VAT. See, it's a whole different ballgame. Phew, we've covered a lot of ground. So to start wrapping things up, let's just quickly summarize the essential numbers you need to know for this tax year, and most importantly, where you can go for help. Here they are, the key figures for 2025/26. This is a brilliant slide to screenshot or save for later. You've got the £6,000 capital gains allowance, the standard VAT rate, the main inheritance tax threshold, and of course, the personal income tax allowance. These are really the core numbers that all these calculations are built on. So let's do a final, super quick recap. Number 1, keep detailed records for at least 6 years. 2, remember that £6,000 sales threshold. 3, UK legal tender coins like Britannias and Sovereigns are your CGT exempt friend, but gold bars are not. And finally, if you're actively trading for profit, you're in the world of income tax, not capital gains. Which really just leaves us with one final, very important question for you to think about. When you look at your own collection, your investments, or maybe even your small business, are your records in good enough shape to stand up to a check from HMRC? If the answer to that is no, or even, I'm not really sure, then it's probably time to get some professional help. For expert advice that's tailored to your exact situation, whether it's about gold, collectibles, or any other tax matter, you can get in touch with the brilliant team at My Tax Accountant. Their details are right there on the screen. And finally, just a quick disclaimer, please remember that all this information is for general guidance. It's all correct as of November 2025, but it isn't a substitute for professional advice that's built around you. So before making any big financial decisions, we always recommend consulting a qualified expert, like the fantastic team at My Tax Accountant.